Hey folks, Dan Frio here with your market update for March 14th, 2024. And remember yesterday I said, if you get some inflation numbers this week that are just a little bit higher than expected, what are you going to see? Well, you're going to see the stock market drop and you're going to see mortgage rates take a jump. Unfortunately, that's what we got today. The producer price index just came out and it was a little bit hotter than expected, but retail sales came down and there's a mixed bag of goods right now. So without further ado, get to my report for today. So what you're seeing right here, these are the top 6 products people use when they're buying their first house. These are not my rates. These are not any individual bank's rates. What they are is Mortgage News Daily. Right up through there, they survey lenders all over the country and ask them these 5 questions. 5 questions are, if you have somebody looking to buy their first house, a single family home, and they were going to live there, and they have a 780 credit score and they're putting down 25%, that's what your rate's going to look. Okay, it's going to be a little bit higher today because these rates are going to go up. So if you're not in that category where you don't have a 780 credit score, you're not putting down 25%, please, I'll give you my information at the end of this video because I'm a mortgage advisor licensed in all 50 states and I'd love to help you. So without further ado, let's get to today's news. We see here wholesale inflation rose 0.6% in February, more than expected. So my expectations were the stocks were going to drop, and they're dropping as we're seeing them right now. We have the Dow Jones down 100, S&P down 20, and we have the NASDAQ about down 100 as well. What's actually happening behind the scenes? Well, the producer price index right through here, you're going to see through here, the producer price index up higher than expected. So let's just take a snapshot of what's happening today, or let's take a snapshot of what happened this week, because you got to remember the Federal Reserve's meeting next week. What are they going to do? Well, they're inflation data heavy. So here's what we have for the week. Tuesday, we had the CPI number. This is consumer inflation. Reading previously was 0.4. They expected it to drop a little bit to 0.3. It came in at 0.4, right as expected. The CPI month over month went from 0.3 to 0.4, up a tenth. We have the CPI year over year was at 3.1, increased to 3.2. This helped mortgage rates push up a little bit on Tuesday. Wednesday, we had nothing. Today, what do we have? Well, we have core retail sales come in. Last reading was negative 0.8. They expected it to jump to 0.5. Came a little bit easier than 0.5. The jobless claims. What you have to understand is, what is the Federal Reserve really looking at? They have 2 mandates. One is jobs, keeping people employed, and 2 is price stability, aka inflation. So today or this week, you have all this data. Again, you have initial jobless claims. How many people are still working, or how many people are actually filing for unemployment claims? Because the Federal Reserve says, well, if you're not working, you're not making any income, so you can buy stuff. So retail sales will start to drop. So right through here, initial jobless claims went from 210. They were expected to uptick to 218, came in at 209. I'll just take that as a walk. It's basically flat right there. Producer price index month over month was previously at 0.3, expected it came in at 0.3. It came in at double, 0.6. Okay, that's a little shock and all right there. Then you have retail sales. This is kind of helping the matters a little bit. Last reading was revised to negative 1.1. They thought it upticked to 0.8. It only upticked to 0.6. Okay, so I want you guys to understand this is a lot harder to predict this stuff than you. So what I want you what I want to do is go over here. There's an interview that took place yesterday. I'd love for you guys to see. Let's find it right there. Here it is. PIMCO. This guy used to be the bigwig at PIMCO. I think they're the world's largest bond fund. Okay, let's listen to him to what he said yesterday. Let's get over to this. He has a little bit of a country accent, so don't laugh there. But this guy is amazing. So let's get to it. See what he has to say.
Former PIMCO chief economist Paul McCauley is now an adjunct professor at Georgetown University. He joins us now. So what do the gains from this report mean for the tone of next week's FOMC meeting and the prospects for cuts?
What happened? He died?
I think today's data is very consistent with the base case scenario, which is that the Fed is going to start easing in June and will probably ease 3 times this year. So I think the data is consistent with what Chair Powell has been preaching, and it wasn't, truly warm and fuzzy, but it wasn't hostile either. And most importantly, OER cracked, and that, if it continues, will get us, firmly into that 2 handle for the core, and I think that really matters.
It's not me making this stuff up. The tea leaves. The data, we're watching everything. I do everything I possibly can imagine to help, come out to you guys to provide you this data. seeing right at this. So let's get over and see what the bond market's doing right now, and it is getting hammered. So remember I said stock prices are going to go down. We're at over 100 points right now with the Dow. We have mortgage rates pushing up. You can see that right through here. So what is this? What are we looking at right here? If you're new to my channel, I try to help you guys figure out where mortgage rates are going. Then I also give you products and things like that we have right now. I'm going to have a special for you right at the end of this video. We have a $10,000 grant I bet you guys don't know about. I'm going to show you a brand new website we just created to help you guys find all these grant programs. So, but right through here, this is the bond that trades on Wall Street. It's called the MBS. It's a mortgage-backed security. So how this works, following this number right through here, okay, mortgage bond. If the bond price, which right through here, a bond price, I don't care what kind of bond, it could be a 10-year Treasury, it could be a corporate bond. If the bond price goes down, yields or interest rates go up. Okay, so that's how it works. A 25 handle here means we're going to be in the 7% range right through here. I'm predicting this is going to go up about 0.1. So we're probably going to see 7.04, 7.05 by tomorrow. You can log that in and we check it again tomorrow. But that's basically what's behind the scenes. So the data that's coming in, I feel like it's a moving dartboard. You throw it one day and you hit a bullseye. The next day you throw it right at the same target, it moves, and it's like, okay, now what's the next day? So that's what we have so far right now today in the economic sphere. We also want to go over next week. Next week is the next Fed meeting. You're seeing right through here. So what do we watch on this? So there is actually the CME, the Chicago Mercantile Exchange. They created this website. And it basically tells us this. What is the probability or likelihood the Federal Reserve will change the federal funds target rate, the interest rate they control, at the next meeting? Well, what you have to understand is the current rate right now is 5.25, 5.5. Okay, so let's go down through here and see what it's going to do at the next meeting, because this is telling us what they're going to do at the next meeting. And then we're going to look out to the future to see even the CME predicting rate cuts in June. Let's look over at it. So the first thing you see right through here is there's a 99% probability of what the Federal Reserve is going to do. What? Well, they're going to put rates at 5.25 to 5.5. Well, that's where they are right now. So they're not going to do anything, folks. There's a probability now they're going to cut rates of 1%. That's off the cards right now. So let's look at the probability of what they're going to do the rest of the year. So let's go through here. Let's see if the PIMCO guy kind of, hit it. In March, there's no probability of any increases or decreases. May, same thing. Now you have over a 60% or almost a 60% chance in June they're going to cut rates. And then from there, there's 45% probabilities going forward. Our whole concern is, when is it going to turn? Okay, we just need that one step forward or going backwards in rates to really help out the economy at this. That's the report right now that we have. So let's get over to here. I said at the beginning of the video, I'd give you all my information at the end of this video, because I'm a mortgage advisor licensed in all 50 states, as well as Puerto Rico, and one of the country's largest mortgage brokers. Okay, so I have up to 73 different companies. We have their products, their rates that we can help you with. One credit pool, one application. We're going to shop your loan to over 73 different companies. However, we have a brand new website that just came out today, and I want to show you guys. You guys have a special peek at this. So if you want to share this video, I'd love for you to spread the word around. We have a grant program, and it'll basically scan all the grant programs, or the three main grant programs that we offer, right on this website. So I'm going to preview this over the weekend, but you can take just a quick glimpse at it. We're going to see if you qualify for up to a $10,000 grant. It's pretty simple. You just go down through here and answer some questions, and you'll see, do you qualify for grants or not? I'm going to do an in-depth video on this over the weekend, so you guys will be prepared next week to find out what exactly we can to help you. So if you really want to work, reach out to us to see, can you buy a house in 2024? Is it in the cards? Is your credit score good enough? Do you make enough money? Do you have a down payment? Well, grant might help you with that down payment right through here, because it'll give you up to $10,000 in grant money. Free money to use toward your down payment and closing costs. These are the things. Okay. So again, one credit pool, one application. We're going to shop your loan to 73 different lenders, as well as give you the opportunity to see if we can get you into any of these grant programs. How do you do it? Well, you go to therateupdate.com. Here's our website. And you can do a few things. We have two big calculations up there. One is the loan estimate. Here's what you do. If you're locked in at a rate right now and you think it's way too high, just upload your loan estimate right in there. Let me analyze it. and see, can we get you a better rate and maybe better fees? Okay, that's number one. I already went over the grant program there, so check that out. And the next thing is, if you want to apply to see, maybe can you qualify? If you're looking, what I always tell people is don't disqualify yourself. Talk to a mortgage professional. That's here at us with the Frio team, but we'd love to help you. So the first step is click the button. Put in your application. Within 24 hours, me, Dave, or Alan will be back with you to go over any questions that you have and put you into basically an assembly line to get you from renting to buying, if that's what you want to do. Okay, so that's what you do. But you can also give us a call or maybe email me directly. So when you're at the rateupdate.com, you can scroll down. There's a ton of information here, folks. Scroll down at the bottom, and then right through here, you're going to find out all that information. So give us a call at 844-775-LOAN, or you can shoot me an email at rateupdate.com. Thanks so much for watching. God bless. Have a fantastic day. Hope to hear from you.